This is a straightforward software comparison. An AI voice guides the walkthrough.
When it comes to pricing, markets.com does not operate on a traditional published fee table with clearly itemized costs up front. Instead, the platform positions itself heavily around promotional incentives, rather than fixed, openly displayed pricing. Rather than emphasizing standard spread or commission schedules on its main pricing pages, markets.com highlights first deposit promotions, bonuses, rebates, and reward programs designed to attract new clients. These offers often include deposit-based bonuses, first trade incentives, and trading rebates that scale based on trading volume, all governed by specific terms and conditions. Because of this structure, the true cost of trading on markets.com is primarily embedded within spreads, overnight financing charges, and instrument-specific costs, rather than presented as transparent, line-by-line pricing. Traders should understand that promotional bonuses are typically not withdrawable as cash until predefined trading volume requirements are met. While bonuses can often be used for margin support or to offset losses, they generally cannot be withdrawn directly, meaning they function more like conditional trading credit rather than actual account equity. This makes markets.com appear attractive at the entry stage, but requires careful attention to bonus conversion rules to avoid misunderstandings later. Feature-wise, markets.com is built as a multi-asset CFD trading platform aimed at retail traders who prioritize simplicity and broad market exposure. Users can trade Forex, indices, shares, commodities, cryptocurrencies, ETFs, and bonds from a single environment. The platform supports web-based trading, mobile applications, and MetaTrader integration for traders who prefer a more traditional execution setup. It also includes built-in charting tools, technical indicators, economic calendars, sentiment data, and core risk management features, such as stop loss and take profit order. There is a strong emphasis on accessibility and user experience, with clean interface design, relatively fast onboarding, and educational material geared toward newer traders. Markets.com also focuses heavily on leveraged CFD trading, allowing traders to control larger positions with smaller capital, which can amplify both potential gains and potential losses. On the pro side, markets.com offers an easy entry experience, attractive promotional incentives, a polished and beginner-friendly interface, and access to a wide range of global CFD markets from a single platform. It suits traders who want convenience, visual clarity, and a streamlined trading workflow. On the con side, pricing transparency is limited, with most trading costs embedded in spreads rather than clearly published pricing tables. Bonus structures can be restrictive, withdrawals may be tied to trading volume requirements, and more advanced traders may find the platform less flexible or customizable than execution-focused or institutional-style trading solutions. For traders who prioritize precise cost control and execution efficiency, the promotional pricing model may feel less predictable than commission-based alternatives, especially over longer-term or higher volume trading strategies. Trading 212 takes a very different approach to pricing by emphasizing clarity and simplicity across its investing, ISA and CFD offerings. For investing and ISA accounts, Trading 212 applies no trading commission and no custody fees, removing ongoing cost friction for long-term investors. Foreign exchange conversion fees apply when trading assets denominated in a different currency, calculated as a small percentage of the transaction value using live interbank rates. Deposits and withdrawals are handled with minimal platform-level charges, with most costs coming from external payment providers rather than Trading 212 itself. For CFD trading, pricing is structured around spreads, overnight financing, and FX fees applied on results rather than on notional trade size. Spreads are dynamic and reflect underlying market conditions, while overnight interest applies to leveraged positions held past the daily cutoff. This keeps entry costs simple
while shifting most expenses to active trading behavior, particularly for leveraged positions and frequent trades. Trading 212 also pays interest on uninvested cash balances in supported currencies, which adds a passive yield component for users holding idle funds. Feature-wise, Trading 212 focuses heavily on usability and accessibility. The platform separates invest, stocks, ISA, cash ISA, and CFD accounts clearly, helping users understand where different rules and costs apply. Fractional shares allow small account holders to gain exposure to high-priced stocks, while automatic investing tools and pie-based portfolio allocation support passive and goal-based strategies. The interface is clean, mobile-first, and designed to reduce cognitive load for everyday investors. Trading 212 also provides practice accounts, educational resources, and simple portfolio analytics that make it approachable for beginners. For CFD traders, risk management tools such as stop losses and margin controls are built into the execution flow. While the platform does not aim to compete with professional-grade trading terminals, it prioritizes speed, clarity, and ease of use across devices. On the pro side, Trading 212 offers extremely simple pricing for investors, intuitive account separation, fractional investing, interest on uninvested cash, and a highly accessible user experience. It lowers barriers for beginners and long-term investors while keeping ongoing costs predictable and easy to understand. On the con side, advanced traders may find execution tools, customization, and market depth more limited compared to specialist trading platforms. CFD traders must remain aware of overnight financing, spread variability, and FX fees on results, which can compound with frequent trading. Asset availability may also vary by region, which can limit diversification for some users. In terms of user feedback, Markets.com currently holds a Trustpilot rating of 3.8 out of 5, with users frequently highlighting responsive customer support, helpful staff, and ease of use. While some reviews mention platform stability issues and execution visibility concerns, Trading 212 holds a Trustpilot rating of 4.6 out of 5, with users consistently praising its intuitive interface, low-cost investing experience, and accessibility for beginners, alongside occasional criticism around platform limitations and feature depth. Ratings are subject to change over time, vary by region and account type, and viewers should always verify the latest information directly on Trustpilot. Final takeaway: if your priority is broad CFD market access, integrated analysis tools, and a streamlined discretionary trading environment, Markets.com fits that role. If your focus is low-cost investing, long-term portfolio building, and an intuitive platform that removes friction from everyday investing, Trading 212 is the stronger choice. These platforms are built for different trader profiles, not direct substitutes. If this comparison helped, hit like, subscribe for more honest trading platform breakdowns, and click the link below to access the platform that actually fits how you invest, trade, manage risk, and stay consistent over time.